Which tech companies pay the most amount of money? I'm a fan recruiter and I've seen with my own two eyes some of the ridiculous compensation packages that these tech companies are offering software engineers these days. So if you want to make the most amount of money, which tech company should you work for? And spoiler alert, it is not NVIDIA. So stay to the end of the video because the number one top paying tech company is really going to surprise you because it's not the company that you think it is. So when it comes to figuring out which companies actually pay the most, anybody can simply go to Glassdoor.com or levels.fyi and filter by the companies that pay the most in the tech sector and then just read the list off to you. But because I'm an actual tech recruiter that's been working in this industry for the last 7 years, I can tell you, number one, if some of these numbers are truly accurate or not, and if there's any companies that should also be on the list that are usually not included. And I can tell you what's actually happening behind the scenes for certain types of roles, because not all roles in all companies are paid the most comparatively to their peers. Each company does specialize in something, which means they will be paying more for specific roles. Also, keep in mind, websites like Glassdoor.com and levels.fyi, all of this information is volunteered by the people that are on this website, which means people could lie. And also keep in mind that this calculates total compensation for people who have been working at a company, not just new joiners. So if you've been working at a company for, let's say, 5 years and you're a top performer, you may actually be getting paid more than new hires for that role. Because keep in mind, if you're a top performer, the company would be giving you a lot of money to keep you there and so you don't leave. Now, first, let's look at Glassdoor.com, because this used to be the best place to go to figure out if you're being paid appropriately and which companies pay the most. Now, you can see here for a software engineer in the Bay Area, which is where most of these engineering jobs will be, it says $118,000 to $187,000. Now, as a recruiter, I can tell you right off the bat that this must mean that this only shows base salary amounts. There's no way that this could include total compensation, which would be your base salary plus your bonus, and some companies don't have them, by the way, as well as your compensation in stock, which could be RSUs or stock options. So based on how low these numbers are right here, my assumption is this only calculates for base salary. And if you filter this by companies that pay the highest, it shows Airbnb, Cruise, Meta, Roku, and Roblox pay the most. But I'm looking at these base salary numbers here, or these compensation numbers, and I can tell you that this is definitely only base salary. There's no way that total compensation at Airbnb is $293 or Meta is $273. This must be base salary numbers, because I've seen offers at Meta and I know that if you were a fresh college graduate from undergrad, you start off total compensation at around $230,000 in the Bay Area. And so this is definitely base salary only, because if you're a senior person at Meta, you're going to be making close to $1 million if you're in a software engineering role. And you can see here that Cruise ranks number 2 on all of Glassdoor in terms of top paying tech companies. But I do want to warn you that Cruise did announce massive layoffs earlier this year. Almost 50% of their workforce is going to be laid off. So even if you can get an offer there, it is probably not the best time to join, because they may not even be hiring and we don't know how secure your job will be. Now keep in mind, companies that tend to pay a lot more than their competitors and peers in similar industries, like you'll see there is no other FANG company on here except for Meta. There's usually a reason why, and there's high risk and high reward. And also, Cruise has not gone IPO yet, so their stock options currently don't have any value. Some startups may actually have buyback clauses for their options or RSUs, which would give you equivalent cash value. But those tend to be the later stage startups at like Series D or E funding. So knowing that Glassdoor is mostly just going to show base salary here and is not a true accurate representation of total compensation, because a lot of these companies may weigh RSUs as a higher portion of your package, then the Glassdoor is probably not the best place to go. And that's why these days levels.fyi is usually the best source to figure out what the best offers are and if you're being paid appropriately and which companies pay the most. So when it comes to software engineering roles, I think this list is actually going to surprise you. When it comes to levels.fyi, when you filter first by entry-level compensation packages, you'll see that the number one company is Jane Street. And you may have never heard of this company, but it's a quant trading firm. Same with Hudson River Trading and the D.E. Shaw Group. The top 3 companies here for entry-level software engineering compensation ranges all have to do with quant trading and are in the financial services sector. The reason why the top 3 companies all have to do with quant trading is because these companies make billions of dollars almost every single month. And so they can afford to pay software engineers ridiculous salaries. And they also know that they need to compete with other companies like FANG companies. And if you look at the type of work that you would be doing in this type of company like Jane Street, on paper, it's not as cool or sexy or innovative as things you would be doing at Meta, Google, or Facebook, because you'll be working on algorithms that have to do purely with financial trading and speed. So there's not a lot of innovation, and there's usually not a lot of cool projects that you can work on. So in order to attract the most talent, in order to offset that, they're gonna have to pay the most. And I can personally tell you that I have had to compete with these companies for offers, and these packages are ridiculous, even for folks that are just graduating with their bachelor's, master's, or PhDs. Now, interestingly, if you look at the top 10, there isn't a single Mang or Fang company on here. And number 11 is OpenAI, which right now I can tell you is one of the highest paying companies, and I don't think this list is correct because OpenAI should at least be number 4, maybe 5 on this list, because right now they are paying the most. But OpenAI only looks to hire folks that have machine learning or AI backgrounds. So if you're just a general front-end software engineer, they're most likely not going to be hiring you. Waymo comes in right after OpenAI because obviously they're also an AI company, but they are a subsidiary of Google and Alphabet. So they do have RSU packages, but their RSUs are not publicly tradable quite yet, but they do have convertible cash options. Number 13 is Databricks, which still has not IPO'd yet, but is one of the most highly anticipated IPOs either this year or next year. And this company has been doing extremely well over the past few years, especially during the pandemic. And as you can see, the only FANG company on this page is Netflix, all the way down here at number 17. But I have had to compete with offers from Netflix, and I can tell you that they offer ridiculous base salaries. Netflix's base salaries are almost double the industry standard. But in exchange, they usually do not have a bonus, and their RSUs are very small comparatively to other FANG or tech companies. So that's a trade-off that you would make if you get an offer from Netflix, but they do pay significantly above market value. I have heard mixed things about their company culture, but because their compensation packages are so high, it's definitely a great place to go and work, and they have good benefits and perks. I don't agree that Netflix is number 17. I'm pretty sure it should at least be in the top 10, so I don't necessarily think that all of the data on this page is correct. But as you can see here, there's a bit of a trend. Either quant trading or AI companies are going to be paying the most this year. But now, if you filter for all years of experience on average, the number 1 paying company, as I told you before, is OpenAI, which is not a surprise. They have ridiculous compensation packages and offers, and they're especially trying to steal people from Google. Number 2 on the list is Snap. Now, I don't actually think that this is correct. They are not the second highest paying company in the entire tech sector. I've seen offers from Snap, and they are very lucrative, and they are definitely high, but they are not number 2, and they should not be behind OpenAI. Snap also had done some layoffs earlier, and Snap has a big presence in Los Angeles, which actually helps them out from a market geo perspective. So if you don't want to live in the Bay Area and you'd rather live in Los Angeles, Snap is one of the only large tech companies, and they do pay the most in the Los Angeles metropolitan area. So if you want to live there, Snap is the best place to work. Number 3 on the list is Coupang, which you probably have never heard of, but I have had a competing offer that I had to fight with for a product manager, and I can tell you that they pay significantly above market comparatively to the other tech companies, mostly because they're trying to steal people away from Walmart e-commerce, Google, and Meta. And in order to attract them to this company with slightly lower brand recognition, they are paying significantly above market. Number 5 is an AI company, Anthropic. I can confirm that this offer is pretty legitimate, and you can get crazy compensation packages right there. Personally, I haven't had to compete with an offer from Airbnb, but anecdotally, I have heard that they do pay significantly more than the majority of the FANG companies. Cruise is all the way down here at number 11, but remember, unfortunately, they do had some layoffs, so just be cautious. Databricks is down at number 12, but this could be significantly higher once they IPO. I think this is a very conservative amount. And if you remember, Jane Street was number 1 for entry-level roles, and according to this list for all levels, Jane Street is all the way down here at number 49. But as you can see, there's just not enough data here. They only have level 1 salary expectations, and that's because Jane Street doesn't hire a whole lot of software engineers because they don't need that many because they're not necessarily building out new features or products all the time. They just need to adjust their algorithm for quant trading. So there isn't enough data to definitively say that they're all the way down here at 49th. If you have a lot of experience and you do get an offer from Jane Street, I'm sure it's going to be much closer to the $1 million range. And the only FANG company on this list is Facebook, or Meta, all the way at number 37. Now, I have had to compete with Meta for software engineering roles, AI and ML roles, product manager roles, technical program manager roles, and hardware roles. And I can tell you this is not correct. Meta is one of the highest paying companies in the industry, especially if you tell them that you have a competing offer from Google or Apple. They will give you ridiculous compensation packages far above $388,000. You'll definitely be north of 500, maybe even closer to $1 million. And number 24 may surprise you, which is Broadcom. And I do actually think that if you work on the hardware side, maybe not the software side, but if you work on the hardware side at Broadcom, they offer very good packages right now. And if you look at their stock growth, it has been pretty ridiculous over the last 5 years. They're up almost 700%. And just in the last year alone, they're up 88%. So they're making huge moves in the hardware sector. And if you can get an offer from Broadcom, the growth on your stock could be quite lucrative. It could be the next NVIDIA. Now, another thing that you need to understand when you're looking at total compensation that would be submitted through this company like levels.fyi and other resources like that, because this is all volunteer information and there's no way to verify it. Like, you don't have to upload a W-2 form or anything like that. People could obviously lie or inflate their numbers, but you also need to keep in mind that for some of these that are pre-IPO companies like Databricks or Cruise, the total compensation, they're probably quoting what their recruiter told them as a part of their initial offer letter. And when you have a good portion of your compensation in pre-IPO stock or stock options that currently are not liquid and you can't actually sell them yet, they're going to estimate them at a certain strike price based on the initial valuation of the company when you first join. This could either go up or down based on how many rounds of funding that a company may receive after you join. And you don't even know what your company would IPO at, or if they'll even IPO at all. You could actually fail, unfortunately, or you could get acquired, which who knows what type of strike price you would get on your stock options. So that's why it's kind of hard to understand what the true total compensation number is, because for them, the only guarantee they have is their base salary and maybe an annual bonus. Their stock options do not currently have any value, so they would most likely be entering here what the conservative estimate is based on the valuation of when they joined the company at that time. It could definitely go up if it's a successful IPO. But overall, if you take a step back and look at this list, you're going to notice that there's a big theme right now, and it's what is going to be hot in the market in the tech sector. Obviously, machine learning and AI are number one, but you also need to look at hardware companies because hardware is what is required in order to power and run all of these AI and ML algorithms. So when you're trying to figure out which company that you should go and work for, you should look at what's hot in the tech sector right now in terms of trends, which right now is machine learning, but a few years ago used to be software during the pandemic when everybody was working remotely. You should look at the trends, but you should also look at adjacent industries, both upstream and downstream, that are dependent on those current trends. Just like hardware is growing because of the AI boom, just like how crypto used to be really big a few years ago, and that's why NVIDIA was so popular, because everybody was buying GPUs in order to farm crypto. And one more thing I do want to look at levels.fyi and point out to you is if you go to the principal level, or this is going to be folks who have probably 15 or 20 plus years of experience in the tech sector, these are the top paying companies. And I do not, unfortunately, agree that Google is paying number 3 out of all of these. This is probably not a valid list because there are much higher paying companies than Google, especially at the senior principal level for software engineers. So keep in mind that these numbers are really not accurate. If you're at this level of Principal Plus, you could be significantly higher than $1 million for almost all of these companies. So don't trust this list at this level. Now, at the beginning of this video, I did allude that the top paying companies were ones you've probably never heard of, like Jane Street, or Hudson River Trading, or D.E. Shaw. But because you stayed to the end of the video, I want to tell you what you should be looking at and other companies that go under the radar that people don't even think about applying to because they don't have the same brand recognition and they're not a FANG company. And those companies are called decacorns. So these are the companies that still have not IPO'd yet, but are doing extremely well and have super high valuations, exceeding at least $10 billion. The biggest one, obviously, right now is OpenAI. So that would be a prime example of a decacorn company. So if you could ride or get a job offer from one of these decacorns and they have a successful IPO, that's when you can become a millionaire or even sometimes a billionaire. Now, one thing I do want to point out though is depending on when you join the company, if they continue to get more rounds of funding, they get like a Series E or a Series F funding, it will dilute your shares unless you have founder shares. So keep that in mind, depending on how the valuation goes of your company. And very quickly, some examples of decacorns right now are ByteDance, which owns TikTok. There's SpaceX, which is Elon Musk's company. OpenAI, obviously everyone knows. Stripe, which has one of the other highly anticipated IPOs, just like Databricks, which I had mentioned. Now, of course, you won't even be able to get any of these awesome compensation packages if you don't know how to stand out in your interviews. Because remember, you're going to be competing with engineers who have very similar backgrounds as you, and your resumes are all going to look very similar. So you want to watch this video right here to know how to stand out in your interviews so you can get more job offers. And if you like this video, I'm also going to be posting free weekly career content, so make sure you click subscribe down below. Thank you all for watching, and don't be afraid to shake things up and go get some of these amazing compensation packages and become a millionaire.